having me on.
Hi, this is John Sakwoicz again with Jay Johnson on The Truth About Money here at KZYX. Our next guest will also speak about the Fannie Mae Freddie Mac bailout, $300 billion price tag to you, the American taxpayer, that was done in the dead of night without your permission. Socialization at its best or at its worst.
And they stopped shorting on it.
And they stopped shorting on those stocks. Corporate welfare for the rich. The rich get richer, and the rest of us get poorer. Our next guest is Dean Baker. Mr. Baker is the co-director of the Center for Economic and Policy Research. He is the author of the book, The Conservative Nanny State, How the Wealthy Use the Government to Stay Rich and to Get Richer. I'm going to read an extended quote from his book. I think just says it all, and then we're going to go right to Mr. Baker. Mr. Baker was quoted as saying, quote, apparently the government, and he's talking about the recent Fannie Mae and Freddie Mac bailout, apparently the government is going to hand Fannie Mae and Freddie Mac bucket loads of taxpayer dollars, no questions asked. That's nice. Shareholders in these institutions who would have lost all their money if matters were left to the market may instead walk away with billions of dollars. Similarly, top executives at Fannie Mae and Freddie Mac who earn salaries in the millions and tens of millions of dollars will get to keep on collecting their paychecks. We should all be thankful that the government has intervened. After all, really rich people and investment fund managers can't be expected to be able to handle their investments on their own. They need the helping hand of government when they really screw up. Similarly, we don't want the fate of highly paid executives to be left to the market. If this happens, some might lose their vacation homes and their private jets. Some people say that we had to hand tens of billions of dollars to the country's richest people in order to prevent a financial collapse. And I say this is simply not true. We had to keep Fannie and Freddie in business, but we could have done this by putting conditions on the bailout. The government uses those conditions all the time when it offers help to the rest of us, to low and moderate income people. Unemployment insurance, welfare, TANF, aid for families with dependent children, food stamps, and even student loans come with all sorts of conditions. It is only when we keep giving money to extremely rich people that we find it impossible to impose conditions. Again, we could have told Fannie Mae and Freddie Mac that no executive will get paid more than $2 million a year in compensation, but we didn't. We could have told their shareholders that they were out of luck because this is what happens when you invest in a poorly run, bankrupt company. Instead, we told the people who work as truck drivers and school teachers and fighter fires and cops that we have to pay more in taxes to help out some of the richest people in the country escape the consequences of their own stupidity. While kicking the poor is always fun for politicians, neither the Bush administration nor Congress are prepared to tell the rich that they are on their own. Mr. Baker, thank you so much for joining us today.
Thanks a lot for having me on.
I'm going to start out by asking you, your first question is going to be the last question I asked Bob Poland, our last guest, and that is, if you were to have an hour audience with our next president, what advice would you give?
Well, on this topic, I think that, we really have to restructure how Wall Street works, get the financial markets order, and keep in mind what they're supposed to be there for. I mean, financial sector is very, very important, but it's supposed to serve the rest of the economy. It's about funneling money from savers to investors, from people with money to lend to people who want to borrow it to buy a home, build a home, whatever it might be. And it should be subsidiary to the rest of the economy. And we've instead let it grow totally out of control and, basically give them a blank check. And they're really, pilfering, I would say, from the rest of the economy. If you look back to 2006, the peak year in terms of profits for this business cycle, 30% of corporate profits were in the financial sector. Now, it turns out a lot of those are fake profits because, Merrill Lynch, Citigroup, and the rest all have huge write-downs. But the people who are running those companies made out like bandits. So I think we really have to structure the relationship between the financial industry and the rest of the economy. I'd put that front and center.
Well, a lot of those profits were based on trading in financial instruments that not only are deregulated, but are also very esoteric, things like swaps and derivatives, what I call funny money. I wrote an article for the Alternative Weekly Press on swaps and derivatives. As you know, it's a $50 trillion nominal market, and yet if you were to put a gun to half the people in Congress, they couldn't tell you what it is. What are swaps and derivatives?
What's even more remarkable, you've had some of the people in these companies, in these banks, are saying they don't understand them, which is probably evident now because they've lost a lot of money on it in many cases. Again, this is, it's fine to have financial innovation, but there has to be a real purpose to it. And, I don't worry that we're going to slow down financial innovation because, credit default swaps, these just came in existence in 1998. We did pretty well for a long time without credit default swaps. So, if we don't know what they are, the firms they're working with don't understand them, we can't regulate them, I really don't mind if we wait a few years until we know what they are and we can regulate them. So that just seems kind of common sense to me. And, one of the points, Bob Poland may have mentioned this because we've written on this together, I think it makes an awful lot of sense to have a very modest tax on these transactions because that's a good way of finding out whether they're real or not. If you had to pay a tax of 0.21%, 0.02% on buying or selling a credit default swap, if that made sense for you, if this was a good way to insure against a bond going broke, you'll pay 0.02%. That's really not a lot of money. On the other hand, if you're just gambling, I don't mind people gambling and go to Las Vegas and do it, but